In this video, I want to talk to you about how anyone can retire as a millionaire and give you my beginner's guide to investing in the stock market. Hey, welcome back to the channel. For those of you new here, my name's Chris, and on here I love talking about how to make money online and how to be smarter with your money. Before we get into this video, I'll just quickly mention the Profit Boss Investing Facebook group, and of course just say that this video isn't intended to be financial advice. You must of course do your own research, but I am going to share my opinion on just a beginner's guide to investing and how you can build your wealth in the long term. So firstly, I really think you should be looking at what your goal is. So ask yourself, what's your goal with investing? How much money are you wanting to get together? For example, just to share my goal, so I'm currently 33. My goal is over the next 27 years, by the time I turn 60, I want to have enough money built up with investments in the stock market to be able to change my investments from, instead of them reinvesting money into them and growing them, change them so that any money I earn from those investments gets paid to me as an income. And that will just mean that I can get to my 60th birthday and not have any money worries whatsoever, not have to be looking at, what kind of work do I need to try and do now. I think it'd be really cool to look after my future self and just give my future self that option where if I get to 60 and I'm just tired and I want to rest, then I can do. So that's my goal, but of course you have to ask yourself, what is your goal when it comes to investing? Once you've established what your goal is, you really need to ask yourself, okay, what do I need to do in order to achieve that goal? Now, for me to achieve my goal, because I got started with investing at a late age of 33, it is better if you can start, the younger you start, the better. But because I'm 33, I'm going to have a quite aggressive focus on investing. So I'm looking at putting 80%, that's 80% of my disposable income each month into the stock market and into my investments up to the age of 50. So that's 80% into investments, 20% of my disposable income on enjoyment. So that's obviously spending money on holidays and whatever else you might want to do to enjoy life. Because of course, you do need to spend some money. You can't just save your entire life and not do anything. But once I get to 50, because I'll have built up quite a decent amount of money, I think, by the time I'm 50, I'm then going to switch that round to probably something like 70% on enjoyment and then 30% of my disposable income each month on investments from the age of 50 to 60. Now, I might get to 50, look at what money I have and think, okay, maybe I can't do that. Maybe I now need to do 50-50 and just work it out like that. But I really think that is a good thing to do, and just sit down, look at what money you have each month as disposable income. So that's, of course, the money that's just left over to play with at the end of each month, and look at how much should be going in investing and how much you want to spend on enjoyment. If you're currently watching this video, as I know a fair few of the Profit Boss channel subscribers are very young, so there are a few viewers that are 18. If you're 18, you might want to look at it as 50% of your money going into investments and 50% going on to enjoyment. So if you want to look at an example, like say someone earning £1,500 a month and their living expenses of say £1,000 a month, this is just a rough example, but that means they're going to have £500 a month as disposable income. So literally do whatever you want with that 500 quid a month. Now, if you're 18 and you have 500 quid a month spare, if you go with that 50-50 method, that's obviously £250 on enjoyment, which I think 250 quid for the month is a decent amount. You can have a lot of fun with that much money. And £250 into investing, so from the age of 18 to 60, 250 quid a month, and adding a bit each year for 2% inflation, you would have £2,069,000 by doing that. So that really should just open your eyes to the power of that longer term investing. That is, of course, investing over 42 years. And that's exactly why I've started off a junior ISA for my daughter, who's nearly 2 years old. I've looked at, if I invest £9,000 a year into her junior ISA, and then when she's 18 and she takes that over and continues to put £9,000 a year in from the age of 2 to the age of 60, so that's 58 years, on her 60th birthday, she will actually have £30 million. Now, that might have just blown your mind there. Yes, £30 million at the age of 60. And a lot of people would consider that as just being completely out of reach, and you need to, start some kind of crazy business, or you need to buy a lottery ticket to get that kind of money. But this is the sad thing. Everyone can do this, but the sad thing is not everyone does do it. And it's one of those things where you might ask yourself like, wow, that sounds too good to be true. But yeah, like I say, this is literally anyone can get involved with doing this. You just have to think of your future self and prepare for many years down the line and think, right, if I invest now, that money will then grow over time and I'll end up with a lot more money in the future. But having said all that, now you've got your goal in mind with how much money you want to build up over time, you might be now looking at your monthly budget of how much you can set aside towards this investing. But if you're completely new to investing, you might be saying, well, what should I put my money into that's going to get that long-term growth? Well, these two words are what you really need to remember, and it's simply index fund. Now, an index fund is just a fund of a load of companies. So, for example, the S&P 500 is the 500 largest companies in America. And when you buy into the S&P 500 as an index fund, you're literally then buying a part that say you put £100 into it, that £100 has been split across those 500 companies. And this is just a fantastic way to just put the money in there, and you don't need to be any kind of genius with picking the right companies to invest in or anything like that. And it's so simple. It's quite boring actually, but simple investing, simple boring investing over the long term is actually really, really effective. Now, there's not just the index funds, there's other kinds of funds. There's like managed funds, and I actually have money in those kind of funds as well as the index fund. Like the FTSE 100, that is the largest 100 companies in the UK. I have money in that fund, and I have money in funds to do with like robotics, and also companies that are just based in China, but it's a fund, so it's a lot of companies in China. I haven't just picked one or two companies in China that I hope will do well in the future. It's a known fact that the majority of start-out investors that choose their own companies do not do anywhere near as well as just putting your money into something like an all-world tracker, for example, which will be a fund that is for many different companies across the entire world. It might have 1,500 companies in it. And you're just so much better off if you aren't like an absolute investing professional that does this as a day job, day in, day out, to just put your money into one of those funds. When picking a fund and looking to grow your money over the long term, do make sure that you select the fund which is an accumulating one. So you get accumulating or income funds. An accumulating one, anytime there are dividends paid out to you for owning that fund, the money will just get reinvested back into it and you'll earn money on that money that you've just earned. If you choose the income one, then any money that you earn from that fund, that those shares that you have in that fund, will just be paid to you as an income and won't get automatically reinvested. Speaking of dividends, because someone did mention on a Profit Boss live stream here on the channel, what's a dividend, they asked me, and it never crossed my mind that there would be people that wouldn't know what a dividend is. So a dividend is simply a reward for you, the investor, buying into a company. Not all companies do pay dividends. So a company like Tesla, for example, that are growing, they would, instead of paying you as a reward, because they're growing still, they just take their profits and reinvest it back into their company to grow it more. But older companies, such as like Microsoft, Coca-Cola and many, many others, because they're older, they've already experienced the majority, the major part of their growth, they still want investors to buy their shares in their company. So rather than rewarding them with this epic growth, they just reward them by paying you. It can be monthly dividends or quarterly, sometimes they're even yearly. So yeah, I just wanted to explain that's what a dividend is. And that's how you then earn that money and then build up even more money by earning those dividend payments. Now, the final thing that I think you should know as a mega beginner with investing, obviously this video isn't the only video you'll ever need to watch about investing. There is a lot to learn. But you want to then know what kind of platform you should put your money into, which is then going to grow your money over the long term. And obviously I can't personally tell you which one you should go for, but I can tell you which platforms I use. So at the moment I'm just using Freetrade and Hargreaves Lansdown. And the reason for going for both of those platforms instead of just picking one is because each have different kind of funds that you can pick and choose from. So that's still a fund where it's many companies, but I just wanted that ability to be able to choose more if I wanted more. Once you deposited money into those accounts, say you just want to go with Freetrade or just Hargreaves Lansdown, obviously it's completely up to you. But once you've deposited money in there, I would recommend, or should I say my opinion, is that you should be investing in the ISA side. So that's the individual savings account, because that is a account there which has a limit, at the moment, a limit of £20,000 a year that you can put in. And that money is then going to grow tax-free, and any money that you take from that in future, you can also then take tax-free as well. So if you go for just say the general investing account on Freetrade, for example, in years to come, if you've made a lot of money from it, with that general investing account, you would have a lot of tax to pay on that, and obviously that's not very beneficial. So just make sure that when you start out with your investing, as long as it's below that £20,000 a year, that it is through an ISA account. I'll leave a link in the description for this video I did, which explains the lifetime ISA, which is another option within your ISA sort of investing accounts. And that's just an account where you can put £4,000 in per tax year, and the government will top it up with £1,000 once you put 4,000 in there. So it's an extra £1,000 a year there up to your 50th birthday. But if you want to learn more about that, as I say, check out the video, which will be in the description. So I hope that's given you a super basic insight into how to get started investing in the stock market. You can check out profitboss.co.uk/investing to read through what I'm doing with my investing. And of course, if you have any questions, I'm not able to actually reply to comments below, but if you join me on the Monday evening 7 till 8 p.m. live stream, I'm happy to talk about investing on that Monday night one. If you've had any value from this video whatsoever, please do press the like button. Of course, if you're not yet subscribed, do consider subscribing to the channel. And until next time, thank you so much for watching, and I'll see you in the next one.